Yeah, what's up traders, you're welcome back to the channel. So it's James again from Africa is Trading, and today I've come with this video to explain entries. So in this one I'm going to explain everything that you need to know to perfect your entries. Guys, remember, entries is an important thing. Yeah, it's where most traders fail in trading. It's where most traders lose money actually when they are actually trying to trade the market. So you should watch this video till the end. You should not skip anything. I repeat, you should not skip anything, because this is where people lose a lot of money, and I don't want you to do that. Most mentors make this part private. They don't share it. They want you to go for the mentorship. You pay for the mentorship. That's when they teach you this. However, me, I'm not such a person. So if I decide to give out things, I give out each and everything, and that's what I'm actually going to do in this video. So make sure you're a subscriber, because I always share contents like these ones more often. So in case you're not yet a subscriber, make sure you hit that subscribe button. Also, I want to apologize for taking long before posting videos on this channel. It doesn't mean that all those weeks I've not been trading. I've actually been trading. However, I've been busy on this channel's project. Okay, so if you have seen that our logo for Africa is Trading has changed, so I've been designing that logo. So I've been working on 3 projects for this channel. I've been designing that logo, you see, the one which I've changed, and also I've been designing a dynamic logo, the animation. So I've finished it, and very soon in the upcoming videos shall be having that motion logo, the introduction motion logo. So it's also done. And again, I've been also designing the website for our channel, so that one is in the process. I'm almost finishing it also. That's why I've not been doing the videos. So since I got some time aside, now let me do the video. So this one is going to be mind blowing. So this video is about the interest. So I'm going to assume that you have the strategy for finding point of interest. So in case you have your point of interest already, you just need to apply this to enter. Doesn't matter the strategy that you use. In case you don't have one, or in case the one you have is not all that profitable, you can watch this channel. You can watch videos on this channel. We have a lot of videos explaining how to determine the point of interest to enter the market. So after getting the point of interest, for example, in our case as Africa is Trading, we use support and resistance. Okay, when I talk about support and resistance, I mean the horizontal support and resistance, also dynamic support and resistance. Those are the trend lines, as some other people might call them. So that's what we trade mainly here at Africa is Trading. So uh, in after determining the zone, you're going to do this. You're going to do this. Let me show you. You're going to do this. So I'm going to show. Let me delete everything here. This volatility 101s. So I'm going to demonstrate using volatility 101s. Is a 15-minute chart. Remember, we have to do a top-down analysis. So let me show you what I want. Let me show you from the drawing board here. Let me show you from the drawing board here. I'm trying to look the for the drawing board and look for the drawing board. Where is it? Here. Okay, here we go. Here we go. Here we go. So I want I want I want you to apply this. Pay attention to this because it's going to change your trading style. Okay, I guarantee if you do it the way I've said, it's going to change your trading style. So this is the point of interest. Assuming this is our point of interest, we want to do what? We want to look for the sell. This is higher time frame point of interest. I want you to wait for the price to go back to the high time frame point of interest, and then you lower down to a lower time frame. By lower time frame, I mean you skip one time frame, you go to the next one. So assuming this is M15, the M15. So that's the point of interest. On 1 minute, price will come back to the point of interest like this, making higher highs and higher lows. We are looking for the sell. So when it taps the point of interest, you need to scale down to 1 minute. Then what I want you to do is I want you to watch the momentum dying out. Momentum dying out, I mean price pushing up to the point of interest, making higher highs and higher lows. Then as it reaches the point of interest, I want you to observe that the market is rejected back to the previous support like this, rejected back to this support, retests it. Then as it retests the previous support, I want you to observe that the market is now, the buyers are now back, and the market is pushing back up, but in a struggling way. In a struggling way. I repeat, this is very, very important. In a struggling way. I don't want the market to push back up with momentum up like this, then it rejects. Don't enter if it does that. If it does that, just wait. You just say it's not a sell yet, I have to wait. You want to see the market retest the support and then struggles to go back, struggles, goes back, rejects, goes back, rejects, creates small higher highs and higher lows, goes back, rejects, reaches a point, throws weak rejections, weeks, tries to go up but cannot go, tries to go up, gets rejected like that. Then definitely the market, after being rejected all those times, it kicks in with momentum downwards like this. That's when you press the button. That's when you press the button and put the stop loss above the structure. Then you manage the take profit. Is up to you. You have to manage the trades as they come down like that. So that's what we want to see. Let me go back to the chart because I don't want this video to be so long, to be too long. So let me take you back to the chart, then I show you what I want to mean. So this is volatility, 101s. So if you know what we trade at Africa is trading, so I'm going to demonstrate using our way of trading. At Africa is trading, we always want to see an area where the price is consolidating inside. Prices are stable, there's no high volume, they are just consolidating, like here. Let me show you, like here. If you look keenly here, this is something that we always want to trade here at Africa is trading. We always want to trade this so much. Price is consolidating here, buyers are there, sellers are there. Then all of a sudden, this big move comes in. When this big move comes in, it brings people into panic. Traders panic, saying, "Hey, my God, the market has left me." They end up chasing it up here. They chase it. So as they see as they see that it has jumped and impulsed up like this, they chase it. So as they chase it, the market again comes back to stop them out. So far as we are interested in this move, when it comes back and taps the point of interest like this, that's when we step down to the entry time frame. So I said if you're on M15, you have to jump M5 and go to M1. So the time frame doesn't matter, it depends on what you trade. So we are here. So as the price comes back there, we go to 1 minute time frame and try to look for that area. Okay, here we go. Here we go. Here we go. Let me delete this arrow. I put another one. Okay. Okay. So look at what I've told you. I said the market must come back to the point of interest and it must exhaust. If it jumps up before exhausting, just know that it's fake. You're not interested in that. Like here, it came back, pushing down, pulling back, pushing down, pulling back. So we are waiting for it in our zone. It came to our zone without of momentum, as you can see, pulled back, again pushed without of momentum, pulled back and took out the previous lower high. So most people might have seen this as a break of structure and they entered, change of character action, and they entered. For us, we are not entering there. Why? Because there was no exhaustion down here. So for us, when we see this, we are saying show us more. We didn't see exhaustion. So we didn't enter. As those people entered immediately, the market started to exhaust in upward momentum, not in downward momentum. This was the sign that price is coming back down to take out lows this way. So for us, we just waited. We didn't enter. We said we want the exhaustion. So market spiked down like this to take out this low there. So we expect that. So no problem. For us, we are saying now show us more. As it came down like this, pulse down, pulled back, again impulsed down, pulled back. But now start to see how the market is no longer making these big impulses downwards. It is impulsing down and pulling back to almost 100% of this impulse down. So here it impulsed down, pulled back to almost 70%. Look at the impulse again, which came very small. that this is a sign of exhaustion in momentum. So after seeing that it impulsed here, pulled back, impulsed down, but could not even put in a lower high, a lower low. It could not even put in a lower low. So that was what the sign of weakness. So when it impulsed up to take out this high, so we knew that now the momentum has kicked in after seeing this exhaustion in these pushes and pull back, push, pull back, push, pull back, push, but could not put in a lower low. It could not put in a lower low, so that was sign of weakness. Then push back to take out this previous lower high, that was shift in momentum. So we execute there and put the stop loss at the spread size below this low. So spread size like that. Again the market came back to retest this low, but it could not take us out because we had our stop loss a little bit below that low. So we executed here after seeing this exhaustion and then momentum kicking in. We executed, put the stop loss below there. Then we managed the trade as it came to take out this highs here. We managed the trade. So that's how you do it. So here, if you had done that, you would have entered there. Let me show you. You would have entered here, and yes, your take profit could have entered here. Your TP could have been around there.